Welcome back, investors, to Ticker Time News. I'm Adam, and today we're talking about Palo Alto Networks, ticker symbol PANW. Palo Alto Networks released their fiscal second quarter of 2021 earnings report today, and it came in looking pretty good. This stock today was down 3.16% to $384. But in after hours, after the earnings report was released, the stock had dipped down over 5% and is now currently just down 0.78%. So it's made quite a big comeback. You can see this large green candle right here. You can see the comeback it's made since then. So it bounced off of this support line nicely, and this support line is right at $364. But real quick, before we dive into the details that you came here to see, I have just one request. Smash the like button and click subscribe and join our family of investors. All right, let's get into it. Palo Alto Networks, their stock did drop, like I mentioned, 5%, but they've made the comeback. Revenue for this quarter was up 25% year over year to $1.02 billion, and EPS, or earnings per share, beat with a solid $1.55, beating the street by 12 cents. Subscription and support revenue was up 34% year over year to $762.2 million, topping the $737.5 million the street had predicted. Billings were up 22% to $1.2 billion compared to the 17% growth in the last year's quarter. Deferred revenue grew 30% to $4.2 billion. The CEO said the momentum in the business continues to be strong, with second quarter revenue growth of 25% year over year to over $1 billion, driven by strong execution across the board. CEO also mentioned the events like Solar Storm highlights the importance of cybersecurity. All right, we'll come back to this in just a moment. Let's dive into their income statement. You can see here total revenue. We've got 3 months ending, and then we have 6 months ending in the far right columns. So for this quarter, total revenue of $1.01 billion, and that's up from $816 million just a year ago. If we look at 6 months ending, we're at $1.96 billion, up from $1.58 billion a year ago. So making good progress on that. Now, the cost of revenue was $307 million. So it cost $307 million to make that $1 billion this quarter, which is pretty good margins. And if we look back a year ago, it cost $233 million in order to make $816 million. So their profit margins are getting better. Gross profit was $709 million, up from $583 million a year ago. So that's looking really good. Now, 6 months ending for gross profit, we have $1.37 billion, up from $1.13 billion a year ago. Now, if we dive down and look at their operating expenses, it still is operating at a loss. We have $798 million for total operating expenses, which brings our loss down to $88.8 million. And a year ago, they lost $52.9 million. All right, let's slide down to their balance sheet, and we can see that their total cash on hand is $2.11 billion, and their total asset is $9.48 billion, and that's up from $9.06 billion a year ago. All right, let's look at what's going to happen in the future, what they are forecasting. So they are predicting that their quarter 3 forecast revenue of $1.03 billion to $1.06 billion, with the street saying that it should be somewhere around $1.05 billion. So they're all right in line there. Earnings per share, or EPS, of $1.27 to $1.29. The street says $1.28 is where it should be. Billings are expected at 1.22 to 1.24 billion, up 20 to 22% on the year. Now, for the full fiscal year 2020, revenue of 4.15 to 4.2 billion. The street says that it should be around 4.13 billion, so they're all right in line with each other. And earnings per share of $5.80 to $5.90. Street says $5.81, so they are right in line. Billing should come in at 5.13 to 5.18 billion, up 19 to 20%. So good, solid growth. All right, so let's just look at one quick thing here. The rating system from Wall Street. Wall Street analysts are very bullish on the growth of Palo Alto Networks. It's sitting at a 4.5 out of 5 on their rating system. So for the past year, Palo Alto Networks is up 59.58%. All right, let's hop over to the charts and see if we can find a good place to buy into this long story growth company. So just last Friday on February 19th, Palo Alto Networks hit their all-time high of $403. This is the first time they've broken above $400 per share. And that was just on Friday. And then throughout the day, it sold off. And then this morning, it sold off. So during the day today, it sold off 3.16%. But then after it came down to this support level, stock bounced right back off of that. So what you're looking for, if you want to start a position or dollar cost average your way into a larger position size with Palo Alto Networks. Okay, so you're looking for, and this is what you want to set your stock alert to do, anywhere between $345 and $364. If you can get in anywhere between those two price points, you're getting yourself a good deal on Palo Alto Networks. Cybersecurity is a big, growing industry. And as companies are moving more and more digital, cybersecurity is going to be moving right along with it. Whenever you have digitalization at a company, you're going to need cybersecurity to protect your digital assets. And that's what Palo Alto Networks is set up to do. So again, just real quick, 345 to 364. That's your entry point that you're looking for Palo Alto Networks. So just make sure, keep about 20% cash holdings. So when buying opportunities present themselves, you are ready to act. Okay, so that's it for Palo Alto Networks. I hope you found a ton of value in this video. I know I did, just going through it with you guys. Palo Alto Networks is definitely a stock on my radar. Make sure to smash that like button and click subscribe and join our family of investors. We're here to help each other. I'll see you in the next video.